Over the past financial year, we operated in an uncertain environment. Global geopolitical tensions continued to impact commodity markets, trade flows, and supply chains, while producers faced lower commodity prices, grain quality challenges, and margin pressure. Against this backdrop, we are pleased to report that Senwes delivered the third best financial result in its history. Financial highlights. Profit after tax attributable to shareholders increased by 25.3% to R808 million, while return on opening equity improved from 14.4% to 17%. Normalized headline earnings per share increased by 12.1% to R4.48 per share, and net asset value per share grew by 11.3% to R32.33. Return on invested capital increased to 13.8%, up from 12.8% last year, driven by strong growth in net operating profit after tax, despite a modest increase in invested capital. Return on capital employed improved to 17.1%, up from 16.1% last year, driven by strong growth in group earnings before interest and tax, despite a modest increase in capital employed. Total shareholder return was 9.3% for the year, supported by a 1.6% increase in the share price and a 39.9% increase in dividends paid and proposed. This resulted in a dividend yield of 7.7%, up from 5.5% last year. Own capital ratio decreased by 4.9% to 38.9% due to significantly higher grain inventory levels which were financed mainly through commodity facilities. The gearing ratio increased by 34% up to 94.7%, primarily reflecting higher interest-bearing debt levels during the year. Importantly, this is only the third time in the group's history that profit before tax has exceeded R1 billion, and profit after tax attributable to shareholders has exceeded the R800 million threshold. The year once again demonstrated the strength of Senwes's diversified business model. Today, our portfolio is more balanced than ever, with meaningful contributions from all four operating segments. Other notable highlights. A special dividend of 36 per share for Senwes, and 35 per share for Agribel was declared. AgriCoin, the group's new short-term loyalty program, was introduced effective the 1st of May, 2026, which will replace the previous Agri-Rewards program. The Vinlab Group acquisition expanded Envirotech's footprint in wine, beverage, water, and microbiology testing. When we turn to our segment performance, the market access segment remained a significant contributor to group earnings during the year. Production conditions improved considerably, with national white maize production increasing by 40%, yellow maize by 21%, and soybean production reaching a record 2.8 million tons. While the larger crop supported higher grain intake volumes, the season was not without its challenges. Late rainfall in the last quarter of the previous financial year resulted in significant grain quality issues, with undergrade maize exceeding 30% nationally. Combined with lower commodity prices, this placed pressure on profitability. In response, we continued investing in solutions that create value for producers. The introduction of color sorting technology helps improve grain quality, while expanded drying infrastructure enables us to receive grain earlier and provide greater flexibility during the harvesting season. The strongest contribution to our financial results came from the input supply segment. Operating profit in this segment increased by more than 100%, supported by strong performances across the retail, fuel, wholesale, and equipment operations. Within this segment, the equipment cluster was the standout performer, with profit increasing from R22 million to R231 million. This strong recovery reflects improved execution, more favorable market conditions, and the benefits of strategic initiatives implemented over the past few years, including the acquisition of Tractor and Diesel Oturin and the successful integration of Prodist into Falcon. A key contributor was the continued turnaround of SFL Holdings, the group's German John Deere business. Following a leadership transition, a structured stop the bleeding, stabilize, rehabilitate strategy was implemented, resulting in a recovery from a R167 million loss to a R8 million profit. Senwes Equipment also delivered steady growth, with profit increasing by 3.5% to R148 million, despite lower revenue due to constrained producer spending. The retail and fuel cluster, comprising Hinterland and KLK, delivered a strong 34.6% increase in profit to R218 million, driven by resilient demand, strategic execution, and operational discipline. Hinterland sustained its upward momentum through growth across key retail categories, notably animal healthcare, supported by increased disease-related demand, strong customer relationships, and targeted marketing initiatives. The fuel business remained robust, with higher volumes and effective supply management offsetting lower fuel prices. At KLK, performance was underpinned by a deliberate shift towards higher-margin retail products, expansion of the customer base, and continued market share gains in irrigation regions. Fuel volumes also grew through site upgrades, loyalty initiatives, and the expansion of the KLK Express offering. Trading conditions within the processing, conditioning, and market segment remain challenging, particularly in the raisin and meat businesses, where weather-related quality issues and weaker demand impacted performance. Despite these headwinds, several encouraging developments were recorded. Bastion Lime delivered record results, while Envirotech Group achieved a record profit of 47 million rand, supported by a combination of organic growth and strategic acquisitions. Within Envirotech Group, the acquisitions of Vinlab and Nemlab further strengthened the segment. Vinlab is an independent ISO-accredited laboratory based in Stellenbosch, South Africa. The acquisition supports Envirotech's strategic objective to expand its analytical and microbiological testing capabilities across the beverage and wine, water, and pharmaceutical sectors. Nemlab is a specialized diagnostic laboratory focusing on nematode testing, plant disease, and soil health analyses. Together, both businesses enhance Envirotech's technical capabilities and geographic reach, strengthening its position across commodities, geographies, and customer segments, and positioning the group for future growth. The financial services and advice segment delivered steady growth despite a lower interest rate environment. The credit cluster delivered a 1.8% increase in operating profit to 166 million rand, supported by strong growth in the financing book. The debtor book increased by 10.5%, while hectares financed grew by 9.8%, reflecting continued market share gains and strong client uptake. The insurance cluster delivered stable results, with summer crop insurance premiums increasing by 9%, driven by higher hectares insured. Looking ahead, AMC, a John Deere dealership in the Northern Cape, was acquired effective the 1st of May, 2026 as part of our strategy to expand our mechanization footprint. The 2026-27 production season presents a challenging outlook with an expected El Niño cycle impacting yields and increasing credit demand. The group remains focused on operational efficiency and disciplined capital allocation to navigate this environment. Despite this, the sector remains resilient and adaptable, and we continue to focus on disciplined execution, operational efficiency, client centricity, and sustainable growth as we build on the strong foundation already in place. On behalf of the board and executive team, I would like to express our sincere appreciation. To our employees, thank you for your dedication, professionalism, and commitment throughout another demanding year. Your efforts remain the foundation of our performance and success. To our clients and producers, thank you for your continued trust in Senwes as your partner in agriculture. We deeply value these relationships and remain committed to supporting your growth and resilience. To our suppliers and service providers, thank you for your reliability, collaboration, and shared commitment to excellence. And to our financial partners, thank you for your ongoing support and confidence in our business, which enables us to continue investing in long-term value creation. Together, we remain focused on strengthening agriculture, deepening relationships, and creating sustainable value for all stakeholders.